wondered, how are Bursa Malaysia's marketplace being monitored? Would you like to know how the marketplace is maintained orderly and fair? Welcome to Bursa Malaysia. We are the frontline regulator of the equity and derivatives markets. So, what does this mean for you? Through Bursa Malaysia regulation, we ensure the markets you invest in are orderly and fair, so that you have timely, accurate, and complete information to make informed investment decisions, are able to trade in a fair and efficient environment, have confidence in your brokers to provide secure and trusted services to you. So, how do we protect the marketplace? We have multidisciplinary teams in Bursa Malaysia regulation that focus on specific areas while collaborating with each other to provide a comprehensive network of safeguards for investor protection. We also work closely with other regulators and law enforcement agencies. Real-time surveillance of the market. We have a market surveillance team that acts as your market police. They monitor the stock market against irregular trading activities in day-to-day trading. This team uses an automated surveillance system to monitor trading in the equity and derivatives markets in real time. Should irregular trading activities be detected, this team of specialized analysts will fact-check and engage the brokers involved for their immediate action. Supervision of intermediaries. As safeguarding the integrity of the marketplace is paramount to us, our intermediary supervision team secures the protection of your trading and deposits through consistent broker monitoring and inspection. Disclosure. Continuing listing obligations and gatekeeping of listed companies or products. To be ASEAN's leading, sustainable, and globally connected marketplace, Bursa Malaysia places high emphasis on the quality of our listed companies. This begins from the approving of new listings on the exchange, through to ensuring that listed companies remain of quality through governance and compliance, as it is imperative for investors to be well informed in the fast-paced financial world. Bursa Malaysia regulations listing and corporate surveillance teams monitor companies' corporate announcements so that they are disseminated to you in a timely and accurate manner. Enforcement action is taken should there be any failure to do so, or should there be any material inaccuracies to the announcements made. As we are also a venue for listed companies' secondary fundraising, our relevant departments work together to ensure investors' funds are always used as mandated. We have a dedicated team of finance experts to examine corporate disclosures, including financial reports, so that they are accurate and timely that you can rely on. Within Bursa Malaysia regulation, we have subject matter experts that look at the various international sustainability reporting frameworks that are constantly evolving to ensure that our disclosure requirements are appropriately benchmarked. This ultimately drives the desired improvements in our PLC sustainability disclosures as well as practices. Taking enforcement action. So what happens when the persons are regulated by us? Be they brokers, advisors, listed companies, directors, or their representatives, breach our rules. Appropriate action will be taken against them. The types of action taken would depend on the severity of the breach. Suspected breaches will be investigated, and enforcement actions will be taken if the breach is proven. Our enforcement proceedings and actions are consistent and fair as cases are discussed in a robust manner through our regulatory committees, comprising independent individuals with relevant experience and backgrounds. Policy and rulemaking. Bursa regulation is the guardian to the 10 rule books of the securities and derivatives markets. Rules drawn up by the regulatory policy and advisory team are always outcome-focused. Industry or public consultations with the relevant key stakeholders will be undertaken, alongside rigorous benchmarking processes to ensure the rules are relevant, effective, fit for purpose, and on par with international standards. Each multidisciplinary team in Bursa Malaysia regulation is intertwined and interact proactively to ensure high standards in market integrity.
Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is Plantation Sector Insights, Investing in Malaysia's Agricultural Backbone. My name is Shane Chu, and the moderator for this session. So welcome to join us in this Bursa webinar again. Some of you here as notice, you are very familiar. So happy Chinese New Year to those of you who are celebrating and happy holiday to those who did not celebrate. So today we are going to talk about plantation sector, in particular palm oil sector. Right, because palm oil is the biggest plantation sector in Malaysia. Today we have invited a speaker to dissect the sector for us so we can understand this sector better and make informed investment decisions when it comes to investing in plantation stocks. So before we begin, as usual, disclaimer. Whatever we share in this webinar is only for educational purpose. In no way that I give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decision, you're solely responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. He first indulged himself in the SME financing industry right after finishing his diploma in finance and investment in TAR University College. He continues to pursue his interest in the finance and capital market by joining Rakuten Trade and TA Securities, which he held the position of risk and compliance officer and dealers representative. To date, he has over 8 years of experience in the capital market as an investor himself, where he also runs One to Invest, a financial blog which amassed over 60,000 followers to date. He is also the associate director for a private equity firm, Sensuria Capital Sdn. And currently, he's also a SGX Academy speaker. So he's none other than Mr. Max Tan. So Max, how are you today?
Hi, good evening, everyone. Hi, Shane. I'm doing well.
All
Hope you
right, happy
guys are fine
Chinese New
too.
Year, Max.
Happy Chinese New Year to everyone who celebrates and happy holiday. Hope you guys enjoyed the past few days holiday back then.
All right, so you may share your screen.
Sure. Thank you so much. Just one moment, guys. All right. Okay, thank you for the kind introduction, Shane. And today, indeed, we are going to talk about the plantation sector. I can already see some of our friends here are quite excited about some specific companies, but as Shane has mentioned, whatever we share today, just another disclaimer, another layer of disclaimer. We are not licensed to give you any form of investment advice. So please be reminded that this session is only for educational and informational purpose only. If you need any form of investment advice after the session, feel free to contact your respective broker or investment advisor, right? Okay. So let's jump into it straight as we are a bit late. Okay. So as you are aware, plantation industry, I saw one question here also mentioned that plantation industry or agriculture as a whole is actually a very critical source of economical contribution towards the whole Malaysia, right? Now I'm going to talk a bit about the backbone of agriculture before we really jump into the CPO part. We go layer by layer. So according to the statistics by our Bank Negara Malaysia, the agricultural industry actually contributed by 6.4% GDP back in 2023. And specifically, this sector is still growing by 7.3% in Q2 2024 and 3.9% in Q3 2024, respectively. However, the term agriculture is quite generic and quite wide because when we talk about agriculture, it actually also includes the fisheries. And just for your context, like I mentioned just now, 3.9% growth back in Q3 2024. It was largely contributed by the plantation industry, which specifically palm oil, which is our focus today, while the fisheries industry actually contracted by a bit, a lower harvestation. And I think with the inflationary pressure to come, with all this tariff in place, we will probably expect some inflationary pressure, hike in prices and whatnot. So we might see the continuation of the current strong CPO price. And as you all are aware, I'm pretty sure you guys are aware, and we are proud as Malaysia is one of the largest palm oil producer in the world. We are the second largest palm oil producer next to our neighbor. And our neighbor, just for information, in 2023/2024, Indonesia produced about 43 million metric ton of palm oil, which for the sake of information, we just call them CPO later afterwards. And Indonesia now actually commands more than half of the global market share. So they're the number one in terms of production volume, and we are the number two. Where Malaysia, we have produced around 19.71 million metric ton of CPO back in 2023. We command around 26% of the market share in terms of the CPO production. So quite huge in terms of the numbers. So I think it's quite safe to say that Indonesia and Malaysia, collectively, we command around more than 85% of the total market share. And we do have a certain say in terms of the CPO prices around the globe. But of course, this CPO price is not that our plantation players say, oh, today I want to price it at 5,000 per metric ton, then the price will go up. No, it also depends on a lot of factors, demand and supply, weather, and also the competitors. We'll talk about that in the later part, which we'll talk more about CPO peers, competitors, and the demand landscape in the next few slides, right? And talking about agricultural sector as a whole, right? So recently, I'm sure with the strong glove companies' performance, some of you might be also interested in terms of the rubber production. Now, while it's true that Malaysia, we are the sixth largest rubber producer in Asia Pacific, but it doesn't mean a lot, right? Our neighbor, north side neighbor this time, Thailand, they actually command around 36% of the global rubber production instead. Now, our local glove manufacturers, actually, they are focused more towards synthetic rubber, which is nitrile glove, just for your information. And if you are still into, we talk about agriculture, right? If you're still into rubber, this specific industry, and actually the rubber price actually performed quite well, especially SMR, which is the standard Malaysia rating, okay, which is the standard for the rubber blocks, right? SMR and also global prices for rubber has indeed increased quite significantly over the past 2 or 3 years. So some of the companies that are involved in the raw rubber, or maybe in the block business, which is one listed company in Malaysia, is called Seng Fong. They are into the business of processing some of the raw rubber into block rubbers. So you can look at their financial performance recently, they are doing quite well. However, again, just like palm oil companies, they are also highly susceptible to the volatility in rubber price, and also they are cyclical in nature, right? So next, I'm going to talk a bit about the GDP growth of the agriculture sector. So this is taken from our DOSM. This is a very brief snapshot of how the agricultural sector performed since 2016 in terms of the growth. Of course, the sharp decline in 2020, as you can see from the chart, is largely due to the COVID, which impacted the sector growth overall. If not, actually, you can see that this sector itself is actually growing, right? And actually, for the past 2 years, if we talk about the production volume, later on, I will show you a website where you guys can also check on the production volume of the average Malaysia plantation industry as a whole on monthly basis. So on the past 2 years, the production volume per month is around 1.54 million metric ton per month on average basis, where in 2023, it actually peaks at 1.94 million, which is at in October. And then on 2024 is, sorry, 2022 is 1.81 million metric ton in terms of production volume. So you can see that there's a slight cyclical nature for the palm oil plantation, which typically in Q2, especially in the Q4, they would usually perform better. So you will see better results. Why is this important? We'll talk about the volatility and also pricing. For someone asked about valuation, right? So we'll talk about the impact of the volatility of the quarterly earnings and how would it affect the PE ratings, and also if they pay out dividend, how does it impact the dividend yield? How should you deal with this kind of spike? And also if there's a drop in terms of production volume, they sell lesser, how do you deal with it? Okay. Okay. So we're going to zoom a bit into the CPO, right? As I mentioned earlier, why we are going into CPO is actually largely due to us, we have a certain advantage of being the second largest producer around the world, right? So just for context, from 1975 to 2019, the total planted area for plantation specifically has actually increased by, I think, around 10 times. From last time, we have 0.6 million hectares back in 1975. Now we are at the peak of 5.9 million hectares in 2019. But bear in mind that this amount we cannot go on forever in terms of the increase, because our Malaysia government has actually capped the palm oil plantation at 6.5 million hectare in order to preserve the forest, right? So although we see the total planted area has increased, but the mature area planted, which means the palm oil are ready to be harvested. I'll talk about the age of the palm oil tree and significance of it later on, so you can understand more, right? So in terms of mature area planted, which means the palm oil that they can harvest has been on a declining trend. One is because of previously impacted by COVID. The drop is from 2020. And secondly, is actually by a lot of not efficient replanting activities that are going on across the whole palm oil industry. So a lot of trees are now not productive. So let's talk about the age of a tree, a palm oil tree. For information, from your starting of the planting until the third year, the palm oil tree is considered not productive because they are not giving you any kind of fruits, right? You're not harvesting them for their wood. It's not acacia, not that you can harvest in 2-3 years. You need to wait for them to bear fruit, which is called FFB, fresh fruit bunch, FFB. Where from the 3rd to 4th year olds, depending on the breed itself, it will start to produce, but it's still not optimal, right? And from the 4th to typically anywhere around 12 to 15 years, depending on the breed and also the height of the tree, this is the best time for the harvester, for the labor to go and collect the FFB, right? And by the age of 25 years old and beyond, the tree itself is become not so productive overall. The production volume or production yield will decline. I'll talk about yield later on. Production yield will decline. And also, there's a factor of the tree height I mentioned just now. When it goes beyond 20 years old, the tree becomes very high and the process of collecting the FFB become harder and harder, right? But these are some of the factors, the replanting activities that are causing, until the data that I have up to 2023, 2024, the matured area, which is optimal for palm oil production, has been on a slight decrease trend over the past few years. Okay, but now yield per hectare, which can be defined as how many million or how many metric ton kind of FFB can be collected per hectare of planted area. This can be improved going forward. Why? If you look at some of the newly listed company, I give you an example, Johor Plantation. If you look into their prospectus or you look at their website, actually they did mention some of their new breed like KT Colonel and DXP. If you're in the industry, you probably know about it. But if you're like a layman like me, I just study, I just know the name, but I just know that this could possibly create better yield in terms of the FFB per hectare going forward. Now, KT Colonel has already started, but I think DXP is not so soon, right? So all this innovation in terms of the what we call the seedling and also improvement of yield is actually good for the overall sector, because as these palm oil companies, they want to grow further. As I mentioned just now, 6.5 million hectares has been capped. So they cannot just simply buy land and keep planting. One, they can improve their replanting, which is crucial. One company in Malaysia that I believe you all know that has been listed for some time, but due to they have ample land bank. They also have very good performance. I mean during their peak, but I think they fall a bit lax after that, after the peak performance. So they're not doing a lot of replanting, rendering the company drop a lot in terms of value. I think dropped to 70-80% of their IPO value. So you see the significance of replanting. Whether a company is doing a lot of replanting activities to reimburse their future inventory in one sense, right? And if you see at the first pointer of this slide, in Malaysia, I think we have approximately 75 plantation-related companies that are listed. And a lot of them, they are actually CPO related. Some of them, they had exposure to durian, they have exposure to a bit of rubber, right? And some of them, they probably still have a bit of timber business. But as you know, timber business is no longer a favored industry because of a lot of deforestation. Even they have license ESG issues, they will not see a lot of fund manager go in. They will not be, there's no interest onto the company. And someone mentioned United Plantation just now. Interestingly, there's also another company that have coconut plantation as well. Coconut is also one of the growing industry, but it is not our focus today. We'll talk about CPO mainly today. If you are interested in investing into CPO, right? Just for information, there are a couple of ways that you can do over in Bursa Malaysia or in the Malaysia market. Number one, you can get direct access by futures, but futures relatively is a more advanced tool. It's really not for everyone, and it's very easy to blow up your account. Number two, you can go through some of the companies that are listed in Malaysia, which is our focus of the webinar today. And number three, I just got to know that recently there are some CPO related warrants has just got listed. So if you're interested, I'm not sure who are the issuers, but you can check them up as well, right? Okay, so as I mentioned just now, most of them, they are actually CPO related, and we also have the advantage of being the second largest over in the world, right? And entering into 2025, this year, actually CPO prices is still doing quite well, and prices is still holding well above. I think as of the time we are talking now is around 4,003 per metric ton. I think this is more than enough for profit for a lot of CPO related companies. Now, for clarification, I would like to clarify that not all plantation companies straight away they are exposed to CPO, right? There are indeed some upstream pure play players that they plant and then they only did a bit of mouling activities. Mouling means that they take the FFB, which is the fruit, and then they produce or extract the palm oil from it, and also the palm kernel, which is PK, and then they sell it. Some of them, they actually plant, they collect the FFB, and then they sell the FFB off directly, right? Because they think that their technology is not so advanced. The yield, or what we call technically, is the oil extraction, which is typically anywhere around 18% to 22% recovery rate, right? For the oil extraction, which means when I bring in X amount of metric ton of the FFB, what metric ton kind of CPO output can I get from there? Some companies, they don't want the trouble of that, so they just, they just do FFB selling. FFB, PK, they will also follow the fluctuation of the CPO prices as well, right? And the next part, some of the company is the balai one. Okay, in this sense, it's the balai one. They do not have sufficient FFB, but they have their mouling plant sufficient to support more FFB. They don't have so much plantation. So they buy from outside during CPO, good times of CPO. They just buy from outside and then they mow it themselves and then they sell it off as a CPO, right? Of course, this would require a palm oil mill. It would involve a lot of capex and whatnot, and also the fixed cost is relatively higher. And you can imagine that during CPO price is not so good, their cost is probably higher. Okay, and if you want to imagine, okay, I don't know whether I see some more experienced investors here, but for the sake of some of you who are relatively new to the palm oil industry, so how does the company operate? Just imagine that you have a plot of land, right? So they need to clear the land, obviously, and then they start plantation, and they start to optimize the planting, like between each tree, what is the optimal distance? What kind of fertilizer should I use to optimize the fruit that they produce, the growth that they have, right? And they also need to monitor in terms of the efficiency. Typically, if I take the statistics for MPOB, which is the Malaysia Palm Oil Board, from 2023, 2024, typically anywhere around January to June, the average FFB yield in tons per hectare is around 6.79. If you cannot remember a number, don't worry. I'll show you the website later on. It's around 6.79 in 2023 first half and 7.62 in 2024 first half. So why is this number important? Is because when you're looking into any palm oil plantation company, especially when you're looking into those that are FFB focused, you should compare with the industry average. At least this is the industry average. Of course, if you want to compare with some of the leading players, you can compare them directly from annual report to annual report. But if you are solely comparing with the industry as a whole, which includes, this is only on estate. It doesn't involve the smallholder, right? Smallholder is the with smaller plantation area. It's only involved the estate. So these are the statistics. And in end of 2023, I think we're still somewhat impacted by the El Nino, which is a bit of drop. And entering into 2024, second half, we can see that the yield actually significantly improved to 15.79 ton per hectare in 2023, 16.7 in 2024. Again, I'll show you the data later on. Don't worry about the numbers, right? And so far, this is the industry number. And so far, 2023, 2024, Peninsula Malaysia plantation yield is relatively better than Sabah and Sarawak. But interestingly, if you look into the CPO yield, Sabah and Sarawak, sometimes they have a better yield as compared to Peninsula Malaysia. So we really need to look into the land bank and also operational location of a specific plantation company. Hey, where does your land bank situated? If you are in Johor, I will compare your land bank performance in Johor in comparison to other Johor companies instead, right? Normally it's focused on Johor, Sabah, Sarawak, and also some in Kelantan, if I'm not mistaken, right? And at the later part, I will also explain what happens next when they produce the CPO and also the PK, palm kernel. Some companies, they also sell palm kernel oil, which they can extract by crushing the palm kernel. That is a deeper down into a rabbit hole a bit. And in my own opinion, I think that's a bit more downstream. There are also some companies that would use the waste of the FFB for the fuel feedstock, which we will discuss a bit later on, right? Okay, now on to the next part. We have a comparison of the CPO prices against their competitors, right? Over here you can see that there are CPO, sunflower seed oil, rapeseed oil, and also soybean oil. And in 2024, just for information for the learning process, global production for the soybean oil is around 56.3 million metric ton, right? China is leading, 28% market share. US is number 2 with 20% market share. Brazil is the third, 17% market share in terms of the soybean oil, right? Rapeseed oil is somewhere around 32 million metric ton based on my own calculation. European Union has 30% market share. China has 22% market share. Canada has around 14% market share. And someone will ask me, how about olive oil? Olive oil, yes, it's very good for our health, but I think it's more relatively expensive for direct comparison and also in terms of the volume as compared to all these other vegetable oils. So why do we need to understand all these competitor, understand their production landscape, where are they from, and the market share? Because apart from the production volume of the FFB and also CPO, which is resulted, this is on supply side. When we talk about the pricing for everything, we need to figure from both sides. Supply side and also the demand side. We talk about supply side, which in Malaysia, El Nino effect, which where extra rainstorm can also cause a lower production. Too dry, it could also cause lower production, right? And those are the factors that could impact in terms of the production. But imagine that if today you are buying, let's say Pepsi and Coke, just for comparison's sake. If Cola just decided some warehouse just gonna increase price by 50%, obviously a lot of us will shift to a alternative. So this is the same for commodities. It's a very direct conversion into the other replaceable products, where if soybean oil, for whatever reason, due to lower production in the countries that I mentioned just now, or rapeseed oil, suddenly there's a drop, lower production by a significant basis. So on that sense, it will also potentially drive up the demand for other replacement, which could be CPO, could be soybean oil, could be sunflower oil, and increase the price. So if you have the time, to look into the replacement products or the substitute, the price movement is also relatively important. These are the few important substitute that you should look at, right? Okay, next we're going to talk a bit about the consumption countries. And naturally, we know vegetable oil is an important source of food, especially for cooking. So when we talk about source of food, it's very correlated in terms of the population in the countries that are importing it. One of the largest few countries, China, India, and also US, right? The higher the population, chances are there are higher demand, and also their chances are more inventory are being built up for their own people. And one indicator that I would look at apart from the peer prices is the ending stock level of the key countries, which is you can see over here China, India, and of course also the US, right? The higher their inventory build up, the right likelihood for them to repurchase more in the next month, just like any other commodities or any other products, is relatively lower. So you will see a lot of forecasts saying, oh, inventory in the developed and also developing countries is high. Probably next month, the export of our CPO of Malaysia and Indonesia is going to be lower. Then the CPO prices might go lower. And these are the factors that impact the CPO prices. And relatively speaking, the companies that are involved, like CPO, palm oil related companies, they could also be affected in terms of their share price also, right? And just for information, we mentioned about weather just now. Another issue with the current palm oil plantation sector is that, interestingly, Ganoderma, if you know that one of the key product that's produced by one of the listed companies in Malaysia, which is called DXN, Ganoderma is also eating up, impacting the production yield of crops and FFB. But this is just additional information, just for information, right? And next slide would be the production volume, right? This is a compiled data that you can get very easily online, whether from MPOB or from LCG, which is one of the research site from Busa. So in 2024, production volume is relatively lower in 2024 is lower than 2023, possible due to the weather impact as well, right? And just for a recap, as I mentioned just now, lower production volume, it doesn't really all the time means a bad thing for CPO production country. Because when people forecast or they think that CPO prices, the supply of CPO is going to be lower. So what do they do now? They probably going to try lock in the supply forward, right? When they try to lock in the supply going forward, it will drive the price for now to go up, to build up their inventory. Unless otherwise, as I mentioned just now in the last slide, their inventory level is already high. So now that you mentioned that, oh, my production volume is going to be low, it's going to set off against each other, right? And then next, the weather and impact. Okay, so this is a chart that shows the, the temperature and also the El Nino effect. Just for information, for those who heard the term for the very first time. And just for information, in Q4, some of you may intrigue as we are entering into February. By the end of February, a lot of companies, they are going to declare their financial results. So in November 2024 this year, the earlier part is relatively dry in terms of weather. But second half of November 2024, there are more rains and it impacted some of the areas. And especially in December, I'm sure we'll see a lot of news related to flooding due to excessive rain, especially in the Sabah and Sarawak region, which is quite bad, right? Hopefully the people over there are fine. This would also somewhat impact the production volume for Q4 in 2024, their financial results of this CPO related company. Now, you might think that once we are looking into so much information, like, oh, I have to look at the peer price, sunflower seed oil, and then I have to look into the weather, I have to look into inventory level. There's so much thing to look at. It's quite complicated for retail investor like me to understand the whole landscape. Unless you're very dedicated in researcher and you have plenty of time on hand, then it should be fine for you. Then otherwise, what should I do? Actually, just monitor the price of CPO. Most of the time, all the news, whether it's good news, bad news, or whatsoever, traders, they had already reflected the CPO price in a forward month, which is the latest month contract. So this would actually save you a lot of time, or you can just look at the MPOB latest price. This can save you a lot of time to look into this kind of information. Of course, these are good. Give you a unfair advantage over other people that you already probably can forecast going forward what's going to be happening in terms of the CPO sector, while the price may or may not already reflected. But if you do not have the time and you're still interested in trading or investing in the CPO related companies, just look at CPO. Most of the time, the price is reflected into the CPO sector itself, right? But bear in mind, there's one factor that I hope to emphasize. Production volume, as you can see on Bursa announcement. So I think plantation companies, they have the requirement to announce what is their monthly production. So this month, how much FFB I produced, how many nuts of coconut I have produced. They have the obligation to announce that. But please be reminded that production and their actual sales volume might differ. For example, if CPO price is at a low point and they have a high production volume, it doesn't mean that they need to sell off it immediately. So it really depending on the company itself, may or may not delay some of the inventory to the forward quarter going ahead, right? And next, we're going to talk about what are the things that you should look at into plantation sector. Okay, I think number one is very obvious. Is still looking back into the CPO prices, because whether you are a long-term investor or you're a short-term trader, CPO prices is still a key component for you to look into a CPO related company. Now, I saw someone commented, palm oil companies, usually they are quite generous in terms of the giving out dividend. Why? It's because during a good time of the CPO, let's say CPO price is 4,500, maybe around 5,000, there's not much to do with their money, because apart from buying fertilizer, which is operating expenses, could fluctuate depending on the time. When the time is good, some plantation companies, they probably buy more specialized fertilizer to increase the production. Yes, there are times like that, right? And most of the time, the money that they recollected is really for preservation and also for replanting activities. Now, remember, just a recap, we mentioned just now, any trees that are above 25 years old to 30 years old, their production volume is going to go downhill very significantly. So these are the trees that need to be removed and to be replanted for optimal yield, for younger trees, for the optimal yield of the FFB per hectare. Remember, we talk about yield of FFB per hectare. Excuse me. And of course, when there's a high of CPO prices, there's also a lot of traders or investor, they might come in for that period of time, the potential impact of the earnings. So let's say a lot of people forecast that, oh, next quarter is Q4, right? The production volume is going to be higher based on what I observed in October, November, and also December, and also the CPO prices, relatively speaking, in that 3 months specifically. So there will be more volatility, more people that will come in to forecast or to, I wouldn't say gamble, but to take advantage of the upcoming results. Some people would do that. But for longer term investors, generally you would want to price your investment as cheap as possible, just like you buy anything. But how should you price it? This is the question. Usually people who invest and make a lot of money in terms of the plantation stocks, they go in during the crisis that caused the CPO price to plunge very significantly. Usually this is due to some demand concern over unprecedented events. Touch wood, like COVID, which would cause a significant demand drop because people don't know what would happen. So nobody want to keep inventory. Right? In that sense, it will cause commodity prices to drop at the beginning stage. Right? And when you are trying to invest and at these kind of stages, you need to be aware that some of the companies, they have hedging in place, but it doesn't mean that they are safe forever. For example, if CPO prices, just in case it drops below 2,000 per metric ton, it's likely that a lot out of the 45 companies that we mentioned just now, significant lot of them will be making losses. even at 2,005 ringgit per metric ton, some of the companies, if they do not have a good efficient operational efficiency, or they do not have good yield, it's likely that they might or might not still register losses. So when they register losses, it might cause more panic. And the buying price that you're going in, you mentioned the gold, if you're a long-term investor, you want to go in at a cheaper price, it might impact your unrealized loss, which would also impact you physically, psychologically. Nobody want their portfolio to be red all the time, right? And it will impact your trading strategy or investment strategy by the time. So, and exit strategy is very dependent on the investor itself. I mentioned just now, unless otherwise the CPO prices is very bad. Normally they are very generous in dividend. So some of the investors here saw that, oh, you like dividend yield. If your price is very good, you actually can get up to 12% in terms of dividend yield per annum. Disclaimer, not every company can do that. It depends on your cost of entry. Could also go up to 15%. In fact, I saw one company last 2 years in 2023 during the CPO high is actually trading at a trailing dividend yield of 11 to 12%, which is very, very lucrative. So depending of your objective and your trading strategy and exit strategy, what do you want to do when you go into a CPO? Do you want short term? If short term, you need to monitor CPO price closely. But if you're a longer term investor, you're looking after dividend yield and potentially to get capital gain, but forward over 2 or 3 years, you don't mind waiting, then probably during a lower price is a good potential timing for you to look for some of the interesting investment, right? And next part, it will be the production yield and also the land bank maturity, land bank of the companies. If we talk about yield per hectare in terms of FFP production, and we're gonna talk a bit about extraction of CPO and also PK. So again, I'm throwing some numbers in again. CPO in first half of 2024 is around 1.34 tons per hectare, right? This is supposed to be 2023, sorry, and 1.49 in one half 2024. And then for the second half for the years, which is 3.14 and 3.28 tons per hectare respectively. And areas like Johor, as I mentioned just now, they are usually higher comparison to other states. Of course, Sabah Sarawak, if I remember correctly, is slightly higher by a little bit. Johor is around 3.85 tons per hectare in terms of the CPO yield in second half of 2024 and 3.4 in first half 2024. Just for context of comparison, I give throwing numbers, it doesn't mean anything. So the average number just now is 3.85 in second half of 2024 and 3.4 in 2023, right? And Johor Plantation in 2023 full year, they recorded around 4 in terms of CPO yield, which is CPO ton per hectare, which is relatively performing very well, right? It's above the average. And then someone talk about United Plantation, one of my favorite in Malaysia. They have 6.3 CPO yield per hectare, which is very, very high in 2023. Sime Darby, another very huge company, I think they does around 3. And FGV, again, they have some, probably they have some replanting legacy issue. They landed at 2.8 in 2023. So when you're looking into whatsoever company, by comparing the average figure or you're comparing peer-to-peer basis, you will know that whether the company yield is at optimal level, right? If you're at the time, of course, you can compare regionally basis. So Sabah compared to Sabah, Sarawak compared to Sarawak, Johor compared to Johor. And maybe some companies, they have land bank in Indonesia, like MKH Oil Palm. I think all of their, the listed entity itself, most of their plantation are in Indonesia itself. So you have to compare with the statistics over in Indonesia and which region it is, right? So you have to look into that part. And following that, we talk about efficiency, we talk about I missed out land bank. It's also important to look at what is the land bank reserve unplanted area. There's planted and unplanted area, right? Unplanted area means that I haven't planted anything. The plot of land is maybe there's some grass or whatsoever on it. I haven't touched it. Planted area, it could segmented into young, mature, and also overly mature. I am sure there's a term for it, I forgot the term, but young is where relatively is in the age of 4 to 7, maybe 7 to 8, and then beyond that is mature up to 25. It depends on the classification, right? So based on that, you could also compare on the land bank, how good they utilize the land bank. So let's say a company, they have a huge land bank reserve that is empty. They have not planted everything for past few years. Why? Why are they not planting yet? Or they have unmatched area, but you know that this unmatched area is going to mature in next 1 or 2 years. So you will expect significantly more CPU FFB production from this company in the next 1 or 2 years, because as the palm oil tree matures, they're going to produce more in that sense, right? So you can actually look into the land bank segmented into matured and also unmatured, non-matured area, right? And also cost factors. We talk about the revenue generation potential, which is the efficiency part. We talk about CPU price. We need to talk about the cost also. Now that we are aware that the minimum wages has increased to 2007, and foreign labor, they need to contribute towards EPF as well, right? And just for information, this increase in terms of the minimum wage and also with the contribution to EPF is going to impact a lot of companies that are having a lot of foreign labor, EMS, glove, construction, and plantation. So plantation, when the harvestation part, apart from United Plantation, they sort of have a train ongoing, and also it's sort of automated, it's more interesting, right? And normal plantation companies, normally they would use manual foreign labor, preferably Indonesian, because they have a certain level of experience usually. So when the minimum wages increase, it will somewhat impact the profitability of that companies. And then next, apart from monitoring the labor costs, you should also monitor the fertilizer costs as well, which is the NPK. NPK is the generic term, nitrogen, phosphorus, potassium. These are the common ingredient for the common fertilizer. And some of the specialty fertilizer, as I mentioned just now, used in a specific time to increase the yield. So just for information, prices for fertilizer, they are stabling so far, just in case you would like to monitor further. Now, wages, we know that it's a big news. Obviously, you can see on whatever news website. But how do I observe or monitor the cost level, cost structure of these plantation companies? So you can look at some of the performance of the companies that are listed. CropMate, just listed not too long, or Hectare Fertilizer. These are the two listed that I know that are doing directly involved in the fertilizer. Just look at their financial performance. If they are doing super well, and I'm sure they will explain that, oh, our fertilizer price is high, then you know that probably this is going to impact the plantation companies. Unless otherwise the CPO prices are on the high side, then they wouldn't mind, because they have a higher revenue base in that sense, right? Apologies, probably a lot of snack in Chinese New Year. I'm losing my voice. But anyway, we talk about FFB, we talk about CPO, we talk about PK. Now we're going to dive deep a little bit more, just for your understanding onto the context of the palm oil industry in Malaysia. We talk about extraction of the oil out of the fruit. So what happens with the meat that are extracted? Well, some of this meat or some of this byproduct, they could be such as the palm kernel shell, right? Or palm fiber. They can be used as animal feed, and also they can be converted into feedstock. What feedstock means is a material to burn for biomass plant. But don't put too much emphasis into these byproducts, because usually this is not the focus of a lot of plantation companies. To them, these are waste, so they normally just find someone to dispose of them at a price is quite low, regardless of the CPO fluctuation, right? And just for information, one company that is listed in Malaysia, again, just for you to know what they're doing, Outreach, they collect the waste, which is the palm kernel shell, and they process it to hit a certain level of humidification, and there are some other nutrition level that they need to hit to become a qualified palm kernel shell to export to Japan or export to other countries to use at the feedstock to burn at the biomass plant, right? These kind of companies, they are able to command a certain level of premium over the product because their cost level is usually fixed. But when they export over to overseas with a green certified, green gold label or whatnot, as long as the sourcing of the PKS and also the palm fiber is, we talk about the factor next, which is the regulatory and also ESG factor. As long as it fulfills these factors, it can sell at a very high premium, right? Which is very interesting. But this is just for you to know. Our focus today is still onto the CPO or the plantation industry, right? And next factor, which is the regulatory issue and also ESG factor. I'm sure a lot of people are aware that CPO has been seen as not so environmentally friendly and has a lot of debate. I wouldn't say anything, but debate about deforestation issue persists, and replanting means that you need to chop down the older trees and it costs a lot. And there is also potential of forest fire to efficiently cut down non-productive areas and whatnot. There are some arguments on this, right? But now companies on Bursa Malaysia, I think companies on Bursa Malaysia, most of them, they already have RSPO or MSPO, which are two certifications that require them to comply with certain regulation that are environmentally friendly in that sense, right? So these are the regulatory and also ESG factor. I think most of them has been sorted out so far. And lastly, for longer term investor, think choosing the right company to put into your portfolio is the utmost important thing, apart from finding the right price to sell it. Choosing the right company, as I mentioned just now, the factors, you need to compare the production yield. Where do you compare? In MPOB side, or you compare with their peers directly in that sense, right? So what else should you look at in terms of the financial of the company? The first 3 pointers, I think, is number one is the margin comparison. So let's say if a company, they are doing, you and I, we both are selling CPO, right? We have a mill, we buy FFB, we plant FFB, we process it, and then our cost level is around the same. Our cost level is different. Maybe you're more efficient than mine, so my margin is relatively lower. You need to find out what is the reason behind. Why is that my margin is lower, so you wouldn't invest in me? Probably because I have a hedging policy, which costs me extra, and my counterpart, they do not have any hedging policy, which they might do better in CPO high price. But during the price coming down, they might also see more losses potentially, right? Just trying to understand the margins part. And also, most importantly, the deployment of their cash, which free cash flow taken by the net operating cash flow, reduce the capital expenditure, usually used for the reinvestment into replanting, and see what do they do with their money. Usually, they are being optimized or utilized to be dividend payout. So you just also look at the shareholding structure, right? If there's a lot of institutional investor and also majority is being held by the founding team, there is a very high likelihood that the company will continuously to pay out dividend. This is because they have the pressure to deliver in terms of the dividend payout as and when they have a good profit. And I think liquidity of the stock is also very important, right? We talk about United Plantation just now. They're doing superb. You just look at their earnings, look at the dividend yield, but PE, of course, we're going to talk about PE in a bit. Of course, the liquidity is not so good because the share is priced at 31 ringgit. Nowadays, with retailer investor in Malaysia, 3 ringgit and 10 cent, people also complain expensive, let alone 31 ringgit. So the liquidity on that company itself, not every retailer, they can accept it. So it will result in a lower liquidity in that sense. But probably they might do bonus issue or they may not. We do not know, right? If there is a lower liquidity in that plantation company, when there's a sharp turn in terms of the CPO or the share price itself, exiting is also another issue depending on what kind of volume that you buy, right? So ultimately, look at the financial health, which the revenue, cost, and also profit is very likely to be defined by some of the factors that I mentioned just now: CPO, production volume, efficiency, and also their cost structure. And in terms of the cash flow, see what do they do with their cash, and also look at their replanting efficiency. Are they putting in money every year to replant? Of course, if they are land bank, they tell you, okay, my trees are between 12 to 17 years old. 95% of it is such, right, for planted area. So there's no immediate urge to replant because it's only 12 to 17 years old, right? But if a company, they say, okay, we have 30% of our trees is 20 to 25 years old, but we are not doing replanting. So what does that tell you as an investor? So you need to digest all this information to look into a company, right? Okay. With that, I would like to take some time to bring you guys over to some case study before we enter into the Q&A session. Maybe I can look into some of the current energy. Current energy, yes, they do have a what we call the renewable energy plant, but for doing the PKS is relatively speaking, it's only on average so far. Yeah. Sorry, let me move back to the slide. Okay, let me share my screen. Just one moment, guys. Bear with me. Okay, so this is the site of the MPOB, where you can find the FFBU over here, right? You can check out the average basis. Someone just commented MPOB a lot of data. Yes, indeed, there's a lot of data. You can check out over here. What's the industry average like for that period? If that industry, for that particular period, the industry is not performing well, so be prepared as well in that sense. And over here, this is the second half, July to December. This is on the FFBU on the palm oil estate on a ton per hectare basis, right? Okay, next is this is the yield, which is the CPO yield. This is the extracted oil per hectare. So it's the same concept as FFP, but it is in CPO format, right? This is on Jan to June 2023, 2024, and July to December 2023 and 2024. These are the numbers that I have talked about just now, right? Okay, and probably we look into one annual report of a plantation company, right? Some of you may ask me, why do when I look at United Plantation, they are only declaring 3 quarters. It's very peculiar, right? Normally, listed companies, they would declare Q1, Q2, Q3, Q4, and then annual report. But for this company, if you look at the date that they announced their annual report, just for the sake of information, for a listed company, regulation-wise, they need to declare a quarter's result 2 months after it ended. Let's say ended in December. In February, latest, they need to declare the result. But for annual report, normally a company, they have 4 months to prepare. United Plantation, no, probably for the sake of cost saving, that's why they are efficient. They announce the annual report straight away in the second month, right? So for example, company, they have the time to up to April. Let's say they ended on 31st December. They have the time up to April to announce the annual report. But for United Plantation, they just, they announce their Q4 result in tandem with their annual report. So you can just, look into the annual report. So for the interest of time, I'm just gonna speed it up. Okay. So these are the financial highlight. I'm sure you all are quite familiar with all these numbers. And also borrowing. Borrowing is also one of the important indicator whether the company is increasing their borrowings over time or their net cash position. Ideally speaking, of course, net cash is better, and it also depends on whether they deploy their cash outwards. If they are net cash position, not declaring dividend or not declaring that much dividend, not doing a lot of replanting, so something is wrong when they're holding that cash, unless otherwise they do some M&A activities, right? And usually in all the annual report of the plantation companies, unless they're not doing well, they will tell you their PK CPO production, what is the volume, what is their FFB volume, and what's the PK volume, what's their yield. As I mentioned just now, CPO yield for United Plantation is unusually high, right? I don't know specifically a reason, but the foreign management has done a good job. Probably it's because over here, you see they collect the FFB by train, which is, I think not a lot of people is doing this over in Malaysia, all around Malaysia, right? And yeah, these are the things that you basic screen through in terms of their annual report. And some of the things that you need to look into when a palm oil pricing impact to them. And also the PE valuation. How do I value a company and how do I know which company should I invest into during, let's say CPO prices maintain at 3,005. So what should I do at the time? Should I invest in the lowest PE company or should I invest in the highest PE company, right? So it also sometimes the higher PE valuation in a company, it's a bit not reflective. So let's say United Plantation. So you see that every time probably when they announce a result, there's a steep drop in terms of PE. This is the PE historical chart, right? Let me zoom in a bit. Right, this is the historical PE chart for United Plantation. So you can see that there's a fluctuation in terms of the PE valuation. So how do I define whether a company is good? What is the justification of the PE that is considered quote unquote cheap, right? When there's an uptrend in terms of the CPO price, I would say that if you identify any plantation company still with single digit PE, probably they're the laggard behind. There is opportunity for them to get re-rated on an uptrend basis. But relatively speaking, when the CPO price is rising rapidly and is forecasted to rise for the next few months, normally the company with higher PE justify their earnings. I'm not talking about 100 times PE because they lost one quarter profit. Not talking about those kind of companies, but the companies with the most with a stable profit, but they are trading at a double-digit PE. Normally, they are front runner that people would opt to go for them during a bull run of the CPO prices. But there's also a risk to reward to be considered here. I cannot give you a straight answer, but consider a risk and reward. When you buy into a double-digit PE, let's say high teens or mid-teens, when you buy into a double-digit plantation company, right, and ignoring the yield, let's say the yield is around 3 to 4%, which is on the low side for plantation companies. When you buy into these kind of companies, so when the CPO prices turn and you're a long-term investor, you do not price your investment a lot, then probably you would need longer time to recoup your investment. Because obviously with a double-digit high teens, mid-teens kind of plantation company, the company is priced forward, which in the anticipation of the company is going to do well for the next 1 or 2 quarters in that sense, right? Of course, for high single digits, for some specific companies, they are also the same, right? For MKSHOP, just listed not too long, they have exposure in Indonesia, but I would like to say that this company is probably a bit different in terms of your analysis landscape because you need to compare over with companies over in Indonesia, and also you need to study the landscape of weather over in Indonesia. I think it's a bit similar whenever there's a El Nino or El Nino that's coming in, but it's a very different landscape to study. And this company, interestingly, I think MKSHOP, their yield is not too bad, but they're trading at a high single digit in terms of PE. So you need to figure out the risk and reward when you are selecting any specific company, right? Okay. So I think I'll leave a bit more time for the Q&A part. Maybe I'll pass it back to Shane.
Thank you so much, Max, for sharing with us about the plantation sector. So I believe many of us here have gained enough insights on how should we analyze companies within the plantation sector. So if you have any question to ask our speaker today, you may write them at the Q&A box, yeah? So not the chat box, write them at the Q&A box. Okay. First question basic one from Anwar Serial Katim. What is a CPO?
Okay, if you missed the earlier session just now, we have explained what kind of product when you plant a palm tree, what kind of product that you would get from it. So the first product that you would get from a palm tree is FFB, fresh fruit bunch, which is the fruit for the palm tree itself. And then followed by, if you extract the oil, actually the most precious part for the fruit itself is the CPO. When you crush it and extract it, you will get the oil from it, and the oil itself is crude palm oil. Of course, there's also refined crude oil and also other class of the oil, but generally people would refer to the CPO prices as the most commonly referred commodity price as a price point for you to predict. Some of our friends here have mentioned, for you to predict or anticipate the future earnings of a company that to come, right? Very simple. When the CPO price is high, likelihood for companies that are involved in CPO sector, they're going to do well. But when the price of CPO is low, it's likely that they're not going to do so well. So hopefully that explains what's the context of CPO for today.
All right. So the next question is by Azhar Kamaruzaman. What specific role does Malaysia's plantation sector play in shaping the nation's overall economy and its global agricultural presence? Which key investment metrics and valuation techniques are most effective at assessing plantation stocks?
Okay. The first question, I think we addressed it at the very beginning of our webinar, which we talk about. It represents 6.4% of our total GDP. And obviously, it's also a very important kind of commodity for us and maintain our trade position over. And also, it's also one of the things that we can do to manufacture into downstream product. For example, we have IOI, which is huge in terms of oleochemical to further process this kind of CPO into consumer goods, into cleaning products and whatnot. So we have a cost advantage as compared to other countries. When you use the CPO as the raw material, it depends on what kind of product that you're producing, right? We have a cost advantage where we save on logistic, number one, and also the sourcing and verification, and the whole process is much easier. Now, the second question part on the valuation technique, I think the metrics I have already mentioned in the last two slides. And then for valuation, I think it's mostly on PE, future PE, and also dividend yield. Historical dividend yield is also important in the sense that you should look at whether this company is paying out dividend consistently, right? As I mentioned just now, most of the palm oil plantation companies, they are very generous in paying out dividend. So it depends on your entry price and what kind of price that CPO is trading. So let's talk about a bit of different scenario. If you're buying in at a low CPO price, let's say hovering around 2.5K to 3K per metric ton. So at the time you are likely to take out a dividend, you're trying to milk some dividend out of it, maybe 4 to 5%. It's quite good. And while waiting for the CPO prices to go back up to 4,000, 5,000 to enjoy the capital gain. But when you're looking into CPO prices when it's already at 5,000, 6,000, and the company is already trading at 15, 20 times PE, it's time to look into PE growth, where you try to forecast the upcoming quarter. When the next quarter comes out, what is the normalized 4 quarters trailing EPS you're looking forward? What's the normalized 4 quarter trailing EPS forward? And would that PE make sense? So let's say if the next quarter comes out, the PE would reduce from 15 times to maybe 12 or maybe 10 times. So I think that would be a reasonable range, right? But if the earnings come out, it only drop from 15 to 14, then that is not a very good result. Typically, plantation companies, they would not be priced very high in terms of PE due to the cyclical nature, and also a lot of risk with with this kind of asset. So let's say any form of a huge, mentioned about Ganoderma just now, any significant disease that could cause a lot of loss in terms of inventory, it will also impact them very badly. So there's a risk associated. Normally, they wouldn't be priced at very high trailing PE at normal times, maybe around 9 to 12 times that kind of range.
Thanks, Max. The next question comes from Mahalingam Pakiri. So he would like to know about the biodiesel production in Indonesia. Any update and what is the price of CPO and its future?
As far as I know, based on what information I have, is back in 2023. I think they made around 13 something million kiloliters of the biodiesel. But they are increasingly increasing the biodiesel blending. For those who do not know, this is for the use of transportation, where they would use a blend of the palm oil-based biodiesel to reduce the reliance into the fossil fuels, right? They have a blend, I think 35% mix, 40% mix, B35, B40 and whatnot. And in 2025 starting, I think they're going to launch the B40 I mentioned just now, which increased the percentage of the palm oil in the mix. And in 2028, I think they're going to launch B50, which is with a 50% mix. So this would increase the internal consumption of Indonesia as a country in terms of the CPO production, reduces the competition on overseas level in terms of the demand, fighting over demand, which is a good thing. So this is what I know about them, the increasing mandate over the blending mix of the palm oil component. I think that's a good thing for us. If other countries could also pick it up, for example, I'm not sure why we are not picking it up and mandate it. But if with other countries picking it up, I think it's a good thing overall for what we call this palm oil industry.
All right. So the next question is by Sol. So how do the new tariff war affect the CPO plantation industry?
Okay, I think the new tariff war, you're referring to Trade War 2.0, which there are 25% tariff being imposed to Mexico and Canada specifically, where obviously the Canadian is not happy about that, while China is being imposed a 10% tariff. So we need to look into what, number one, is that a general mandate over to 25% on across all the products? So far, there's no clear answer to that. And Canada and Mexico, their export of products into US is largely not so related into vegetable oils. As far as I'm concerned, I could be wrong, but as far as I'm concerned, there could this is not a very big impact onto the CPO prices yet. In fact, you can see that CPO prices is not really reflecting much after the tariff or the trade war has been imposed, has been normalizing back from 5,000 to current 4,000 to 4,003 in that sense. So I wouldn't say that there's a lot of impact over the CPO plantation industry. In terms of production volume, there's nothing much they can do to us. Although, yes, NPK, which is if you miss out the earlier part, NPK, which we import a lot, which is the fertilizer, raw material for fertilizer. But the tariff war in terms of the pricing towards CPO, I don't see a very huge or very significant impacts over so far as I'm concerned. Yeah.
Now we know that the climate factor affect the production, and if a lower production, then it will lead to high price. So the question here is, generally, are these climate impact beneficial to our local companies or not beneficial to our local plantation companies?
Yeah, I think what he commented is right, where this factor is good and bad in nature. So you need to look at other factors beyond that. For example, like I mentioned just now, the inventory of the purchasing countries like India, China, and US. What is their inventory level? So let's say there's a significant drop, or there's a very bad raining season, right? And the inventory level is low. So you can imagine that with the anticipation of lower production that are coming up, it's likely that for the next 1 or 2 months that they would collect more, increase their inventory value. So the export for that month, for maybe we talk about Malaysia and Indonesia, it's likely that the export for the 2 months forward, it will increase. Hence, it will increase the CPO price over the short term. So another, maybe take one step further, look into a listed company. As I mentioned just now, production volume doesn't necessarily direct reflected into the sales volume. They could still sell higher than what they produce, depending on what they source. Don't forget that we still have smallholder, which are non-estate, where they are smaller. They can still buy from them and then they sell it off. So relatively speaking, as long as CPO prices is good, it's reflected on a higher basis after the weather impact and the inventory level of the buyer is lower, then I think the CPO related companies, or palm oil related companies, they will still be performing well.
All right. So the next question is by Mahalingam. So, what is the average break-even price of CPO? So that's his question.
Okay, I do not have a direct answer to that, but based on what I know so far, as long as the CPO prices is above 2005, a lot of them still are able to make profit. 2000 definitely a lot, they are not able to make a profit. So it's hovering around that range. But obviously, when the CPO price comes down to 2000, you can expect the whole industry is going to perform very, very badly. Yeah. So if you have the time, you can look at a comparison chart. Just take Bursa plantation sector as compared to CPO prices. Look it back to, I think, COVID times. You can see the relativity between the two.
So it depends on who has a more linear structure and who has more cost efficiency.
Correct, correct. And also hedging policy is also important. This is where the time you drive deep into the annual report to see who has a hedging policy. So that will reduce the pressure of lower CPO prices at the time being. Yeah.
All right. So we also have Eugene asking, what is contango and backwardation?
Okay, I think this one Shane is more familiar than me because I'm not futures trader. But for the sake of everyone, as some a layman, basically contango is usually future prices is higher than the current spot price, and then backwardation is future prices they are lower than the current spot price. What does this mean is that it's about forecasting the future next few months, right? When the storage cost, insurance, and maybe anticipation of a higher price to come. For example, as I mentioned just now, the inventory level or the anticipation of a bad weather to come and whatnot. Usually this is what would cause a contango where the forward contract is higher price than the current spot price. And backwardation, that terbalik, a bit confused. So storage costs, insurance financing costs, those increase. They are willing to pay a bit more in anticipation for the future price. And then backwardation, I think, is the current time now at this moment. The spot price is higher than the future price, which means that people are more willing to buy now. Instead, that would cause a shortage. As you know, we have futures and also we have forward contract. One deliver physically, one does not. So these are also the two more advanced way to look into the future demand and supply dynamics. But normally I don't go to contango or backwardation so far. Yeah, I just mostly refer to CPO prices. A lot of times they usually already reflected the current scenario.
Yep, contango is more common lah. Okay, if it happens backwardation, then something is not so
Yeah. Only in
normal.
COVID times I've seen backwardation very significantly.
Yep. So the next question is, we have read news that renewable energy is being used a lot. Also the sector use a lot of used cooking oil, UCO, which partly contribute to higher palm oil price. So may I know how many metric tons of UCO are consumed in 2024 renewable energy globally? This question is from Annie. I'm not sure if you know this data.
Thank you, Annie, for trusting me that I can answer this question. Unfortunately, I'm not ChatGPT and I'm not familiar with UCO, so I don't want to misguide you. But yes, UCO is a trend that is coming up that could potentially, because of the recycling nature. So yes, it could cause more demand, but I do not have a number of UCO being consumed. But I think Global Newswire, you can look at this website. I think if I'm not mistakenly, they have a number on that. Previously, I just glanced through back in 2024.
All right. So the next question is, due to many systemic issues with CPO supply, seems like the new price floor is at around 4,000 ringgit. per metric ton. So is there any further downside to this besides geopolitics?
I think geopolitical issue, I'm not sure. But you can look into the potential impact, which is on. I'm more concerned about soybean oil prices going forward with the current political tension. So just look into the current landscape. So who are the buyers for soybean oil, which is the largest, is in fact larger market as compared to the palm oil market, right? So look at who are the producer, China, US, and also Brazil. Who are the buyer? China itself, US, and also India, if I'm not mistaken. So these are also the key buyers for the soybean oil. So with the current geopolitical tension, will there cause, imagine this, not only for soybean oil. So let's say if initially to supply metal without a tariff, so they could cause a dumping of these products over to other country, right? So I'm more concerned over if there is a dumping, the increased supply towards the countries that we are serving, exporting the palm oil to. So far is India. On that part, I'm not too concerned, but to all other countries, which could cause the increase in supply could cause a lower soybean oil price. And in terms of relativity, we talk about it in the earlier slide, it could also potentially drive down the CPO prices. That is also one of the impact. And yeah, that's one of the thing that I'm slightly worried about. But so far, I wouldn't really say floor price because we just come back down a bit from 4,000, sorry, 5,000, 4,007, 4,005, and now is 4,002, sorry, 4,003 plus. So I'm still monitoring whether this is really a floor price.
All right. So with the new UAK trade agreement, do you think that CPO will have a new demand market?
I'm not sure whether UK they are accepting a lot of in terms of our MSPO standard. Of course, the UK and Malaysia, the CPTPP free trade agreement. Of course, it would have some certain level of increased trading in between these two countries. But when we talk about exportation of MSPO qualified palm oil into UK specifically, I do not have the data how much we export into UK, but I would imagine it would not be very significant. And as you know, developed countries, they are more prone to use some, more bio-friendly. It depends on, okay, to me personally, it depends on the marketing in that country itself, right? In terms of the fat content, I am not expert, but I do not think there's a very significant difference. Of course, olive oil and the other oil relatively are healthier. It also depends on the country itself, whether they would accept the consumer itself, they will accept the palm oil, because over the past years, obviously, EU side, US side, a lot of concern over the production of the palm oil because of deforestation. Now it's getting better, but there's still a lot of this kind of concern. So the CPTPP has just entered on, I think, 15 December 2024. So I think it would take a bit of time that this to take place. And I don't think CPO is one of the key things to kickstart over this part.
All right. So the next question is by Annie. On the ESG front, a lot of efforts have been done to get EU to accept our MSPO as EUDR, which is the European Union deforestation kind of regulations, right? So with the US quitting the Paris Accord, is it still high possibility that the EUDR will start end of this year?
Honestly, I have no answer to that. We still do not know what Trump will do. But I think with the relationship between US and Europe now, there's a likelihood that it could be delayed, because from what I see now, it's not really that good. The conversation between US over and the Europe side, but I don't think that would be very significantly impacting us, because the EUDR and also our MSPO and RSPO certification, I think that has been our MSPO basically has been, like what you mentioned just now, has been increasingly accepted. but it's still not up to a very high level. Of course, soybean oil, rapeseed oil, sunflower oil is still the mainstream over there. Yeah.
All right. So Malingam said that he has checked the CPO price from September to November. It's around 5,000 ringgit per metric ton last year, which was quite high, right? So he said that it's probably due to India consumptions during the Deepavali festival. So is there any other month that can bring the CPO price higher?
I think it's very subjectively speaking because you have to monitor the inventory level and production level by month, and also whether how bad is the months. But let's say in November and December, the flooding I think is more severe than what we expected, the El Nino effect. But then the CPO price still come back from the peak, short-term peak of 5,000. So if you look up the inventory level that has been built up over in India and other countries, as I showed the chart just now it's on a bit of a higher side. So inventory is also a cyclical in nature. Inventory, you couldn't put that forever, right? This is not metal, so you need to consume it, and then there's a cyclical back in nature. But again, at the very beginning of the session, why look into CPO? As we mentioned just now, this year probably gonna be another inflationary year with commodity prices is going to be on a higher side. But of course, oil price now has come down in terms of crude oil and also Brent oil due to Trump's policy. And also of course, his commentary over to the OPEC Plus and whatnot, right? But overall, this year, in terms of commodities, especially on the consumption side, I still see an inflationary pressure. Wouldn't say, like the question just now, wouldn't say 4,000 is a confirmed kind of floor. If I know, probably I become a futures trader. But I think this year probably CPO is still gonna be quite decent.
All right. So the next question is by Haruna is that is the windfall tax on plantation stock still applying?
Yeah, as far as I know, I think there is no significant changes on the windfall tax so far. Yes, it still apply. And the earnings that you are seeing just now, no changes to that. It's already adjusted on the windfall taxes. Unless otherwise CPO prices go back to 6,000, then the windfall tax is a good problem to have.
Okay. So based on the seasonality factor that you have understood about palm oil, so any question is, in which month of this year do you think that Malaysia palm oil stock will hit the low and rebound?
I wish I had a crystal ball to tell you, but so far the plantation sector as a whole, even though with CPO prices coming back down to 3,000, sorry, touch wood, 3,000 plus 4,003 is still doing relatively well. There's not a lot of impact yet, but I think when it breaches 4,000, this is where you can start to monitor, especially if you want to go for long term. When it breaches 4,000, I think is the time where the market start to reflect more aggressively into the share price of this plantation company. Even if I look at, let's say Johor Plantation go up to 1.4 at a high, now it's coming back up to 1.2, right? It's rebounding relatively speaking. And 1.4 to 1.2 is not a very huge drop if you compare to 5,000 back to 4,003, relatively speaking. So if anything, touch wood, it fall below 4,000, I think you need to start monitor by then.
All right. So looks like time has run out for us to continue with the Q&A. I think we have done about 25 minutes worth of Q&A with Max today. So thank you everybody for staying tuned until the end of this webinar session. And thank you so much, Max, for sharing with us the valuable insights into the plantation sector.
Hey, thank you so much. And thank you everyone for the questions. I'm sorry that some questions I'm not able to answer. But once again, thank you everyone for participating. And I'll see you in the next webinar. Thank you, Shane, for hosting.